Hi everybody, welcome to Undertrader Forex here on our YouTube channel. We're going to be analyzing the Euro USD pre-market, market scheduled to open in the next hour or so. So last week we discussed, or on our previous episode I should say, we discussed about, there was this channel over here, we were waiting for a breakout. What I've come to see is that it has created basically a 5-wave move, one being here, two being here, three being here, four being here, and five potentially ending here. Okay? Now stay tuned, we're going to be talking about stops and entries and potential take profit levels uh, over the course of the video, or before the video ended we're going to be telling you this. So here what I want to show you is that, let me take a Fibonacci expansion tool, and where are you? Okay. All right. So here, I'm gonna be drawing at that wave 1. Okay. I'm gonna zoom in a little bit. Um, Set that up very nicely for you. And here. Okay. There we go. Okay. So as you can see, the third wave ended a little bit over the 161.8. Okay. So that's in Elliott wave terms, we have reached our zone basically for the third wave. Okay. And now if I take this tool, this Fibonacci tool here, and extend it all the way here to where the high of wave 3 to wave 4. Okay. So you can see that the 61.8 has touched right exactly where the potential end of fifth wave, as it stands at the moment, has ended. Okay. And the fifth wave itself, as you can see, if you take it from here all the way here, let me show it to you. Let me take that trend line and draw it over here. Okay. Then take another trend line all the way there. So we get somehow sort of a ending diagonal happening there. Okay. So that's why we think that this move right here has completed 5-wave move up, and we're potentially looking for a retracement in where we can re-enter this market on the long side. Okay. So assuming that this move has completed wave 5 here, okay, what we're gonna do is now delete these trend lines. Gonna delete that Fibonacci tool there, and I'm going to take a Fibonacci retracement tool. Sorry, I'm gonna go this way. Okay, draw it up there, move it alongside. Okay, so if the market is kind enough to come back down in for a retracement, like an ABC of some sort, and like pull back for a wave 2, okay, that is actually wave 1. Okay, if that is 5 moves and it comes back down here, so that's wave 1, wave 2. All right, so we're looking for wave 2 potentially to be somewhere either here, okay, at the 50% level or the 61.8% level. Okay, but if we look left, okay, if we look a bit left, what do we see here? We have confluence of this level being a very good support level right where the 61.8 is, as well as this move over here. See that resistance or support turned resistance here? Okay, so I would suggest like looking for entries between these levels, 50 and 61.8. Okay, because that could still act, this area over here, the wave 4 could still act as a support when the market comes down and then shoot up. Okay, so around this range you should be looking for buy entries. Okay, with a stop loss right below that, because if we're going up and this is creating a wave 1, 2 and going up 3, we should not go below this level. I'm sorry. Okay, so our stop loss would be somewhere around here, a couple of pips down. Okay, so now that is our entry zone here between the 50 and 61 with a stop loss here. Okay, and now let's look at the take profit. Where are we headed if we are going up? Okay, let me take you to the first. Let me delete this Fibonacci tool here. Okay, because we're done with that. So I've drawn another Fibonacci expansion here. Okay, from this level where the election night was, the big drop, and then the big rally. Okay, and then the retracement. Okay, which I believe was another wave 1, 2, and then continuing up to be 3. Okay, so I've drawn the Fibonacci expansion tool from this low to this high to this low again, and to see where we can project. Now I'm gonna change this chart to a daily. Okay, and zoom that in now. So here we are currently, right, on this move up and then down. This is where we drew our Fibonacci. So we've got two potential targets. Target number 1 is here around that 19,400 number at 61.8, and secondly we have this here, the 100% at 2600, like 1.20 600s. Now why do, for me like I believe this area is gonna be where we should target. I would personally target this area. Why? Because let's look at the confluence. All right, now if we look at the Fibonacci, I drew a Fibonacci as well at retracement from the swing high of the daily chart, the swing low. Okay, and I see a projection of the 113 Fibonacci number right here, right where our 100 is. That's two clues there. We've got clue number 1, which is our Fibonacci extension at 100, as well as the retracement of, the other Fibonacci of this projection over here at 113. Okay, now 113 is a number mostly used in harmonic trading. Don't really see that much in Elliott waves. At least I haven't seen that much, but at least we have got one other clue over here. Okay, and one more thing is, you see this move here that we've been doing so far, I believe is, if we go to the weekly chart, we see that big move. Even here on the daily chart, you see that big move down from all the way up here to down here. Let's all agree at least that big move has to correct, right? All right. Could it be that we are correcting that move or creating a new impulse move? Either way, the market has been going up from here. All right. So either of the two can happen. Either it's correcting, okay, or it's extending to create a new leg up. Okay. So far, again, if we look at it this way, let me zoom in again. If we look at it this way, we've got an A wave here of that big move, of that big weekly move down. A 3 move down for B, and then I've drawn internally here in red, okay, of the C wave, which I believe, if I zoom in here, will end where the orange line is. Okay, now let's look at the internal waves, because wave C has 5 wave move, right? So we've got 1, 2, 3, 4. Okay, reason why this is extending, in my opinion, or why I believe it's extending, is because wave 3, okay, was not what you call it, extended, an extended wave 3. Okay, so internally we have started, internally of the wave 5, we've started building another 5 wave move. So we've got 1 here in green, 1, 2, 3, 4, and then a potential 5 where the orange line is, which is again at the 120,600s. Okay, so that's another clue that we have. And if you want to confirm that, okay, first of all, here on the wave 3, why did I draw the wave 3 here and not over here? Because you see, after this long, usually wave 3 is a very, like a long move up, right? And then you see some stops here, which I believe has formed a triple flat correction. That means A, B, C, X move, A, B, sorry, X move over here, right? A, B, C, and then an X move, and then again A, B, C. This move was 5 moves down, and that's where wave 4 was created. And now we are in the process of a 5th wave. So we should expect to have on this move a 5 wave move to create or to complete 5 waves up. Now, wave 5 is really kind of tricky to trade because it could take a shape of an ending diagonal. An ending diagonal could be something like, okay, it goes up and then comes back in, even though it violates that, um, even though wave 4, after wave 3 and wave 4 comes on that, inside that wave 1 price zone and can still continue up. So it could confuse some traders to thinking, okay, fine, this is not a 5 wave move, it comes down, but it could take a shape of an ending diagonal and still end up here. Okay, and one last thing before, so as I said, like, you can look at these 2 potential targets over here at the 61.8 or the 100%. I've shown you how many evidence that we have more likely pointing towards the 1.2600 areas, being the 100% projection, as well as the 113 projection, as well as the completion of wave 5 for both the green and the red. So we've got 5C over here, and wave C of the big ABC down here. Okay, now one last thing before we sign out here is the weekly chart. Let's go to the weekly chart. Okay, now you see where our orange line is there, where we're projecting the 120,600. You see that resistance over here? That's another clue. That's another clue showing you that if indeed this is a correction of this big move down, so it should terminate around here, right? And continue its fall. Okay, so that's another clue that you got a resistance here at that level. Okay, secondly, let me take this Fibonacci over here, draw it all the way up and all the way down here, and what do we have? Again, we have another zone here. I'm sorry, I drew it upside down, I'm sorry. Let me take it this way. Okay, so, okay, there we go. Oh, Okay, let me just make it down properly. All right. Why is it not going? Okay. Now, what's your other clue? Look at where the orange line is. Right next to the 23.6% Fibonacci of the weekly the whole move from the weekly chart. Again, another clue that we should be trying to test those levels. Those are very strong levels there. Okay? Whether this is a correction of this move or whether we are headed upwards, we've got two clues telling us somehow, somewhere, we need to end up at least on that levels. And one more thing, actually, the last one I promise, I need to show you is that I'm going to delete this first and jump back to the daily chart. Here, I'm going to draw a Fibonacci tool. Okay? You've got A, B. Where's the A? Okay, this is the A. I'm gonna draw it here down where the wave A started. So if you see, sorry, I didn't draw it properly yet. Wave A, wave B, and the start of wave A. Okay. Now look at where the 261.8 ends up, right against that orange line. Again, our price level. So how many clues is that? 4 or 5? Maybe 6. I'm not really sure at the moment. But we've got a lot of confluence there pointing towards that area, which is what I believe will be which should be our target levels. So that's what I'll be doing this week. I'm not really sure about the time or whether we're going to end up there this week or next month. All I know is like somehow, somewhere, we're going to end up in that level. And I will be buying on that levels I shared with you on the 1 hour chart, or the 50 and 61.8% on that range over there. Okay, thank you for watching this video. Please hit the like button, it's free anyways, and subscribe so that we can be alerted whenever our new videos is coming out. All right, thank you so much.